Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for March 21st. This is a Friday. And I kind of adjusted my schedule. So I'm working tomorrow and not today. Get to take advantage of some weekend premium pay. So I'm excited about that. And also I'm excited about, doing this pre-market prep live before the market opens in about an hour and 23 minutes. Starting this a little bit after the hour here, enjoyed my evening last night, and I actually wanted to share a couple things I did post to the channel. So last night, I was contemplating making a video, been getting a very persistent request, and I'm sorry, if you have thoughts, share them in the comments, but if you're just going to bombard me with the same thing over again, please stop. And instead, I watched this Tesla all hands meeting. It's an hour long. It's so inspiring. Whether you love Elon, whether you hate Elon, whether you're deciding, how you feel about him, I think it's tough to argue with the fact that Tesla is a great company. It's brought a lot to the country. It's brought a lot to the world. I would encourage watching this. It's very inspiring. And, it kind of inspired me, started getting me to think. I thought, if you guys are interested, I'm considering doing a stream Friday after the close to talk about Tesla and share some stories, really just from my life, from my career, and how they all kind of relate. And I feel like it's just all kind of bottlenecking right now into, what's been going on with Tesla. And, I'm just really inspired by it. And so if you guys are interested, I'll probably not necessarily have the comments turned off, but I'll probably just do that stream to just share some perspective on Tesla. And I'm just really inspired by it. So make sure you vote in this poll if you do want me to do that. Right now it's 50-50 between yes and don't care. If you don't care but want others to be happy, don't vote. If you want to see it, vote yes. I'm not going to do it if it doesn't get more than 50% on the yes side. But anyways, let's get back to the tickers over here. As always, going to be starting with the UVIX, which is the 2x long VIX futures ETF. Closed yesterday on Thursday at a price of $33.49, being down 3.33% on the day. Kind of remarkable there. I like repeating numbers. It's up about 0.25% in the pre-market. And so what we can see here is that it does look like, following this pullback, it does look like that 50-day moving average at 32.75 does change every day because it is, a 50-day moving average. It's 32.75. The low from yesterday was 32.86. So it looks like, multiple days getting very close to, but not touching that yellow line there. And it does look like now the 21-day moving average, the pink line there, is potentially acting as some resistance. So we'll see what happens. Also, just hovering above the alert that I have set here at $32. To be honest, I suspect 32 will be hit. And I feel like more than likely this orange line at 30 will be as well. And so at that point, just a little bit lower, than where it's at now, $3.50 lower. I think that's going to be, a nice time to start reaccumulating, just kind of like it was over here before getting a big move to the upside. And while, this move, which I believe was around 100%, was very nice, over 100% to the upside. Doesn't always happen. Oftentimes those moves to the upside are much smaller. And it's also, impossible to predict the bottom exactly. And so, kind of like with this smaller move here, let's say, one did predict the bottom there perfectly. And then, that's a 32.5% move to the upside. And so, like I said, tough to predict the bottom, tough to know the exact top. I feel like the UVIX is a good one for 20% swing. And, like on this run, miss out. Like I sold on this little run here on the 25th of February. I believe it might have been actually on the 24th of February. Depends on what my average was. But I just exited at 20% profit. And, I missed out on all this upside. But, it's just about, hedging for when the market turns around. You see this go up. It's nice to take a little bit of profit, whether it's 20% or 100%, whatever it is. Maybe it's 5%. I just think that the UVIX is a great thing to be, kind of stacking on the side. And really also, I like it because it's not biased. Whereas, I used to cover SOXS, which is 3X leverage short semiconductors. That's biased. That has a focus on semiconductors, whereas the UVIX is general. It's across the market. So I just think that this is a nice one to stack on these pullbacks. And, we are in one of those for sure now. Oh, and I guess, on that point, maybe I want to do a Fibonacci retracement here to see where it, could be pulling back to. And so, yeah, the 786 is 3166. Got that alert at 32. Got this orange line at 30, being a psychological level. Three $10 bills, or 110 and 120, however you want to think about it, divisible by 10. I think it's going to be a pretty nice level to be adding more. So yeah, I'm intrigued by this, but not just yet. And if I do switch over to the 10-minute time frame, we can kind of see how this traded yesterday during Thursday during market hours. So we got a pretty sharp pullback at the start of the day, followed by a bounce, consolidation. And what we see with that consolidation, we saw the highest volume over here after it had run up. Then it continues to run up, but volume goes down, suggests some weakness. Even with this spike in volume, it's also on a red candle, 10-minute candle, lower volume. And so that suggested that this is, in fact, not a bull flag. This, is showing some weakness. And then we saw a pullback into the close, which was held into the after hours. And then we started to see it go up towards the end, this is, let's see, right here. We actually saw it went up towards the end of after hours, gap down into the pre-market, fill that gap going higher and then fading lower. So that is where we're at currently at 33.59. So yeah, pretty interesting. I feel like this is, just a good one to cycle in and out of. And right now, it's not in a cycle in or cycle out of period. We're getting there around 32. That will be the start of the cycle in period, in my view, but I, of course, could be wrong. Just a good way to hedge, in my view. And speaking of key levels, looking over at the VIX here, this is the Market Volatility Index, closed yesterday at 1980, being down about 0.5% on the day. And this is the second day trading with a close below 20. So on Wednesday, closed at 1990, now 10 cents lower at 1980. Do have the 50-day moving average in yellow there at 1865. Of course, like I just mentioned, below the alert here at 20. And then also, I just kind of drew it up with the UVIX. We are below the 618 with both the VIX as well as the UVIX. And I might actually, no, I'll leave them up there just, because maybe we don't get to the 786. Once we get to the 786, then I'll remove them. But yeah, below the 618 and the 786 here for the VIX is at 1791. Also below that, we have the 200-day moving average at 1718. And we do have this yellow downtrend, which is, pretty casually drawn just based on the pivot open from December 20th. Got a near test of that level over here on January 13th, a pierce of that downtrend on January 27th, a test of it over here on the 3rd of February, and then we broke above, retest, go higher. So, I think that this is, if you like doing options, if you like that stuff, sure, VIX is great. But for me, I never know when the bottom's going to be, and I never know when we're going to start to do a big rally like this. So I find the VIX to be risky, but I do think keeping an eye on 20 is a nice level to be paying attention to. And so just kind of looking at this bigger picture perspective and thinking about the UVIX with the volume here, we do have lower highs here, also getting rejected from that 200-day moving average. Didn't, for the VIX, well above the 200-day moving average. But we did get rejected from that over here with the UVIX. pulling back. And so with these lower highs in the stock price or the ETF price, we do have lower highs in the RSI. So there's no divergence there. We did get a flip to the red in the MACD, same with the VIX over here. So, but with the VIX, I don't know how this, because it's options and, all of this stuff, it's an index rather than, a stock. But we do see higher highs in the index price here, the VIX price, whereas we see lower highs in that RSI. That is bearish divergence. And following that bearish divergence, we have seen so far about, over a 30% drawdown. So definitely a good time to maybe be considering getting back in, but to be on the sidelines, definitely not going long, or having been long the past couple weeks. But anyways, let's flip over to the SPY. This is the S&P 500 tracking ETF, which closed yesterday at a price of $565.49, being down about 0.3% on the day and continuing down about 0.2% in the pre-market. And so let's see. I was just thinking about it as I was going over that. I'm going to take a sip of coffee. I usually make my coffee before I do those, and then I don't have my coffee until they're over, which is kind of unfortunate. It's still warm, so that's nice. Anyways, coming back to the SPY, let's see. Getting rejected from that 200-day moving average at 569.54. Of course, changes every day because it is a moving average, but right around 570. We hit a high yesterday of 570.57. It does seem like we're pulling back some. I'm going to delete this little doodle there. Is this a bull flag, or, what's going on with it? If we look at the volume, what we can see is coming down here, hitting that low. We did see a little bit of an increase in volume. And then going up, we saw a decrease in volume. Now that it's up here, seeing a little bit of an increase. Nothing really standing out to me too much. But I feel like we could be seeing a pullback on this, so do brace for, let's see, a break of 548. And I do have this alert here at 544. Although, I might actually just adjust that to 548 because as time moves on, this green uptrend moves forward. And so I might adjust this alert to 548. Not that I plan on buying a SPY or anything like that, but just, kind of keep an eye on that level. And then just kind of considering these other levels. So this is just a kind of double top approximate high over here, which is not really lined up that well. So I might, let's see, I might just, move that to right around there. Let's see, what was the high from July 12th of last year? The high was 558.38. So I might, lock that into place, 558.38. And so that's a level maybe to be keeping an eye on. Let's see. I guess I'll go back over to the SPX, or I'll go check out the SPX in a minute. I just kind of wanted to look at, this retracement here. This is, it looks like, I got these two that are in. There's this one here. This is 100%. Okay, so this is 100%. This is the Fibonacci retracement there, both in white. I am going to make this, let's see. I need to change the color of it. I just need to see, what I want to do with this. So proportions, I think I want to add the 1618. Did get a bounce from there, so I think that's pretty nice. And so, what color do I want to make that, though? Let's see. That I'll make it kind of, I think I need to make the line thinner. It's the number one thing I need to do. And maybe I'll just make that red. So yeah, we bounced there. And then let's see over here. So I got this white one here. That is the 382. Got a bounce. Maybe we're finding the 236 as resistance. yeah, effectively, that's what's acting as resistance. And so maybe I want to, here, I'm going to make this line that goes back to that double top, I'm going to make that light blue. And yeah, so I mean, I think that we got kind of this target up here still around 574, but I think that we're seeing some weakness. I think that we're likely going to be pulling back to actually, maybe I don't want to make that 548. I think that would be kind of an alert, as in like a bad alert. Yeah, I think I don't want to make this red because that suggests bad. I think I actually want to make this one a more optimistic color, like green. So I might, very clearly, there's a difference between the uptrend and the Fibonacci there. This one I actually kind of want to make red because I think there's good justification for it as well. So here, this, is the Fibonacci retracement. This is green, where I think we might be finding some dip buy levels, and so that would be around 552. And to be clear, I don't plan on buying this. But then over here in red, we have this Fibonacci retracement, and that is suggesting tops. And that's in red, kind of caution. That's a sell area. So I think that we're in kind of the caution zone, the danger zone, and that we could be heading down to, back down to 552, and then that alert there, caution, getting to new lows here for this pullback. This was at $548.03, getting to 548. That would be time to be cautious. And we can see though that the MACD is potentially going to flip green there, but it might be we do see it where it has these kind of multiple humps, and so I think that we could be seeing another pullback to around 552. So I think that's a good one to be keeping an eye on. I don't necessarily think that we're getting up here. And so maybe what I want to do, I'll just delete that doodle because it's very clear there's a confluence of levels up there. But what I could see happening with this is a rollover to, test these levels and then go up. So something like that. So we'll have to see. And then, with that being said, I should flip over to the 10-minute time frame, before I talk too much. But yeah, just kind of the opposite of the UVIX that we were just looking at. This went up at the start of the day yesterday to then pull back, go up a little bit, and then hold into the after hours before fading a little bit and pulling back some in the pre-market, but then just kind of holding, after that initial pullback. But yeah, let's flip over to the SPX. I'm going to delete this doodle that I have there, and I am going to, check, do I have this locked into place? I don't, but I will make that be the pivot high, 5,666.94. So I'm just going to make it that level. Perfect. And I believe I made that light blue in the SPY. So yeah, marked there, similar. And then over here, I do have this Fibonacci. I'm going to make that thinner, and I'm going to make that bright green. And I'm going to adjust this to not include, or actually, yeah, I'm going to leave the 100%, but I'm going to add that 618, corresponds with a pullback here, just like over here. Okay, and so with the SPX, now that I have that done, and sorry, I'm just going to make this one bright red there. Okay, so now that I have all of that done, all those levels adjusted, what we can see here is that the SPX closed yesterday on Thursday, March 20th at a price of $5,662.89, being down about 1/4% on the day. And what we're seeing here is that, it does look like we're kind of getting rejected from this approximate, double top high over here. That's at around $5,667. Now, it did close just below that yesterday, but we did not get up to the 200-day moving average, which is currently at exactly $5,748, putting in some wick highs over here. Looking at the SPY, similar, and that volume's kind of diminished. Wicks up does make me think that we're seeing some weakness, and that we may not be getting up to this confluence of levels. And so just like with the SPX, let's see, I'm just going to try to mirror what I had drawn over here. And so what I could see is this, pulling back to that 1618 before finding some support and potentially breaking out. So yeah, I mean, we got those that are, fairly similar. The 1618 here from this green Fibonacci up here, this retracement, so not an extension, that is, coming down to around $5,542. And that would correspond with, I actually don't even think I mentioned it with the SPY, this green uptrend here based on the lows from April 2024 as well as August 5th. So you can see that in both of those charts. This one's a little bit approximate. Let's see. And so maybe I actually want to draw that more precisely. So for the SPX, it's based on the lows. For the SPY, that's not based on the lows. So maybe I want to adjust that. And let's see. I'll probably undo this, but I just want to adjust that to the lows. Yeah, what was I thinking? And that just gives a little bit more, expectation that this might go a little bit lower. So the low over here, we can see it marked there, and then the low from August 5th was $505.48. So got that marked there. Both of those levels, going to lock that into place. And so that's kind of a reference level that we have. And again, don't want to be breaking into new lows for this pullback. That would be 548 with the SPY, and with the SPX, that would be getting to, the low over here was $5,504.65. So I'll just adjust this alert to be $5,504. $5,504. And so, yeah, let's see where this takes us. I think that this could be pulling back a little bit. And with that being said, that could be suggesting that the UVIX or the VIX could be, going higher. So maybe we're not getting to 32 with the UVIX. So something good to keep in mind. But anyways, let's switch over to the next one on the list, which is going to be Bitcoin here, currently trading around $84,200. Did, fill both of the CME gaps, and with today's close, we'll be forming another CME gap. And so I am kind of excited about that, to be seeing where this, if we get a pullback over the weekend, there could be another CME gap dip buying opportunity. And so from, just mapping this out from the lows to fill in that gap, which, you're of course not going to time the bottom exactly, you're not going to time the top exactly, but that's a 13.5% swing. Maybe if you just got where it's consolidated here, it's around 9% over the span of like 2 weeks. And so, are you going to time the bottom exactly? No. Are you going to time the top exactly? No. But I think that this kind of sets up, it's good to have a thesis with trading. And these CME gaps, they set up a thesis for trading on a week time frame, 2-week time frame here. And so I think that if we do get a pullback over the weekend, let's see, I'm just going to pull up the doodle tool here. Like we get a pullback over the weekend, and then, I think that could be setting up for a nice trade, something like that. And so I'm intrigued by that. And previously I'd done like $10, maybe I'd up it, which ended up being $20 because I bought the dip more. But, I'd be interested in doing, maybe $100 by the dip. And then, maybe swing that for 5%. That's $5, nothing crazy. But I think that's just a, kind of a good exercise. So yeah, I like this. So we do have this downtrend here based on the highs from, let's see, January 20th, as well as the highs from February 21st. So some resistance there. We'll see. Maybe we could be getting up to there. But yeah, anyways, I do see some comments. Frank, did NIO bear or break missed earnings? I'll dive into NIO once I've gone through the normal tickers. And then Hydra Hustler has some requests. So I'll get to those, but once I get through the normal tickers, one of those being ChargePoint. I actually have some thoughts on ChargePoint. Also, Luminar, I feel like I kind of plan on adjusting my positions because I'm just bullish AF on Tesla, to be honest. And so if you want me to go over my thoughts on that stuff kind of in depth, really just kind of revolving around Tesla, make sure you vote in this poll. If you want to see my kind of breakdown justification relating to those other stocks and Tesla, vote yes. I just kind of want to share some stories from my life and how they relate to Tesla, what's going on currently with Tesla. Yeah, I don't know. It's been kind of, in all honesty, it's been kind of an emotional start to the year in a very inspirational way, but kind of also a very disheartening way, which is unfortunate. But anyways, you got to have conviction, and I definitely have that, and trying to hone in on that conviction. But anyways, Bitcoin, yeah, we'll see. I don't really have too much to say about that, other than I'm very curious to see what the CME gap does. And maybe, let me know in the comments if you want me to do a follow-up tomorrow, CME gap, yeah. But I hope that we do get kind of a pullback over the weekend with creating a CME gap so I could trade that. But anyways, then just thinking about Bitcoin, Ethereum here. This is, currently trading below 2,000. And so what are we seeing here? I don't know. Maybe this is a bear flag. I don't know. But yeah, I think that there's just a lot more upside potential for Ethereum than Bitcoin. But also I think there's, potentially more risk. But I do think that, as far as altcoins go, there are some that definitely get a little bit questionable, long-term existence. I think Ethereum is going to be around for the long term. So I think this is a safer bet that does offer, like a 2x potential to these not even all-time highs here. Whereas Bitcoin getting back up to the highs that we recently had, that is, let's see, only a 30% move to the upside. So I think that, yeah, Ethereum I like, even though it's not very exciting, kind of boring. But yeah, then since I am getting some requests and stuff, I'll move on to uranium. This is ticker symbol URA, the Global X Uranium ETF, which closed yesterday on Thursday, March 20th, at a price of $25.38. Being up about 0.75% on the day and going up about 0.4% in the pre-market. Really, not too exciting. I just think that this is going to be stair-stepping higher. I personally don't have a position in URA because there's really not that much coverage of it. And I think that it's nice to be into, holdings that have, kind of a social media presence. URA doesn't, but OKLO does. Oklo. So I have a few shares of that, nothing too crazy. Would like to be adding more, on this pullback that we've seen, but I'm just, managing that. And so anyways, we do see this stair stepping up. And yeah, I think that from current price, or actually looking at current price, we did get a rejection from this yellow downtrend parallel channel based on the 3 pivot points over here. And that was support over here. I suspect it will be acting as resistance, and that's exactly what we saw yesterday on Thursday. We hit a high of $25.78. That line there corresponds with about $25.60. So got rejected there. Wondering if we'll see a little bit of a pullback or consolidation around the 21-day moving average, around 24.64. I also have, 786 here that I've talked a lot about, $24.51. $24.50. I, thought that this purple line would happen. I was a little bit early, a little bit impatient. Yeah, I think that could be acting as support as we stair step our way higher. So keep an eye on that. But yeah, I'll pull up the NIO chart here. Now dive into that. I did put out a video covering NIO, talking about where I thought, unfortunately, this would be going. And I talked about this pulling back to around $4.40. That's a 786 here marked in yellow. And I'm actually, going to make this be a green line because I think that, got these 2 green lines here. Let's see. And I might make this one thinner. Oops. So, got multiple levels there. And then this is kind of like the ultimate pullback level around 426.5. And yeah, so where are we trading at now? This is the daily chart. Closed yesterday at 471. You guys know that because you hopefully watched the video I put out. Let's move over to the 10-minute time frame. And so, yeah, we're seeing a gap down into the pre-market. And, yeah, let's see. Earnings call, live updates. To be honest, I'm not going to tune into their earnings call. Did not intend to, just because with the translations going from Chinese to English, it can be very slow. And so I don't really find that to be too stimulating. And maybe what I could do is ask Grok to consolidate their earnings call into a little summary. But, we're also going to get that from reports and stuff. But yeah, I mean, we did pull back to fill this gap during the pre-market. It looks like that gap is at 446. Did pull back to the 786 there. And so I might actually, adjust this to exclude that 618 because we've already pulled back below it. And so we got that 786 there at, 440. And yeah, we'll see where this takes us. I was hoping for a big move higher. I regret not selling my calls at slightly above break even, like a week ago. But, you got to live with the decisions you make, and I'm doing that. And, maybe those calls are going to go to zero now, though. They expire in May and June, so a little bit risky. But, yeah, we're trading around here. And so, while I have this doodle up here, effectively, I can just move that to right there. That's kind of what I see happening. And since I'm not going to kind of suggest that I drew that correctly, I'm going to take it from here. I didn't do a doodle. Actually, no, I don't need to do a doodle. I think that we're going to see a pullback here. We're already seeing that. Maybe get down to, and maybe I want to make this yellow. So it's kind of like, caution. Maybe that could be the bottom, but I think that the real bottom would still be putting in higher lows. Could be around 426. So do keep an eye on that. And this, I need to make this red because that could be, was kind of a sell level. And I got greedy over here. Dang it. Got to live with it. But yeah, so we'll see. This has been kind of a frustrating one to hold, to be honest, because I've thought many times that we're breaking out. But, you got to read the charts. And what we were seeing here, what I talked about in yesterday's video, was a pullback, and that's what we're getting. So I think it's good to just sit on the sidelines, see what happens, sit on hands, and maybe we get to 426. Maybe that's a good level to average in at. But yeah, down over 6% in the pre-market. And so yeah, Frank, let's see, Frank earnings call. So what they got from their earnings call, and actually maybe there's no. Usually when you do like a 10-minute or something, 1 minute. They have, little notes in here when these earnings reports come out and stuff, but don't have that. But we can just see from over here. Let's see. NIO fourth quarter earnings, revenue and EPS miss, 45% delivery growth, margin gains, and more. And so just kind of from this summary, the Chinese electric vehicle maker NIO shares are trading lower pre-market on Friday after the company reported fiscal fourth quarter revenue of 19.7 billion Chinese yuan, which is $2.7 billion US. And that is up 15.2% year over year and up 5.5% sequentially. Analysts on average estimated revenue of 2.85 billion for the quarter. And so there's a miss there. But they are up year over year and sequentially, quarter by quarter. So I think that's good. There's a little bit of a miss, but overall, things are trending in the right direction. And then so here it says, excluding items, the company reported an adjusted loss per share, per ADS, not sure what that stands for, of 3.17 Chinese yuan, or 40... I don't know if I'm pronouncing that right, yuan. I know that word from, I think, Michael Saylor, yuan, their currency. Hopefully I'm right, yuan. Or a 43% loss compared to a 2.81 Chinese yuan loss in the year-ago quarter. So the losses have increased per share. Analysts had called for a loss of 42 cents, so 1 cent higher there versus that 43 cents. And so vehicle deliveries were 72.689 thousand in the quarter, which is up 45.2% year over year and up 17.5% quarter over quarter. Consequently, vehicle revenue rose by 13.2% year over year and increased by 4.7% quarter over quarter. So this right here, that tells me it's good. That's a good sign there. And then continuing on, NIO deliveries less than 14,000 vehicles in January 2025 and over 13,000 vehicles in February 2025. And as of February 28th of 2025, the cumulative number of NIO's vehicles deliveries reached almost 700,000. So here we can see that gross margin for the quarter expanded to 11.7%, up from 7.5% a year ago and at 10.7% the previous quarter, as vehicle margin expanded year over year from 11.9 a year ago to 13.1. And so as of December 31st, cash and cash equivalents, restricted cash, short-term investments, and long-term time deposits totaled 41.9 billion Chinese yuan, or 5.7 billion. And so I'm not going to get into all of this. Maybe I'll read the quote from the founder, chair, and CEO. But what I take away from this is that all of the numbers are going in the right direction as far as year over year, quarter over quarter. Earnings per share, let's see, or ADS, loss per share, was a little bit higher than what we'd like to see, but not an insane amount. So I think that overall, this is generally looking pretty good. But yeah, let's just read this quote from William Bin Li, the CEO. He said that in 2024, we achieved a new delivery record of 221,970 vehicles, almost 222,000 vehicles. Throughout the year, NIO brand maintained its position as the leader in Chinese BEV. What does BEV stand for? I should know that. Market for vehicles priced over, capturing a 40% market share. And he continues on. The market share of ONVO L60 has been steadily increasing since its launch, securing a top 3 position in China's BEV SUV market, priced between, that and 300,000. 200 and 300,000. NIO brand will further solidify its premium position by introducing more technology and experience-driven products. ONVO brand, targeting the mainstream mass market, will concentrate on increasing its sales volume and enriching its product portfolio. Firefly's model will be officially launched and begin deliveries in April, serving as the key driver for our future international expansion. And so that's the end of his quote there. So I will stop it. Let's see. I don't know that I can highlight that in this view. But yeah, I don't think that what we're seeing here is bad. I think that what we're seeing here is dip buying opportunity based on, the numbers seeming pretty good overall, but, still, getting up there. And then on top of that, if we start to hear some announcements about Chinese stimulus, and some deals getting made as far as the U.S. government and, tariffs, whatnot. Maybe they're a little bit softer on China than relative to Mexico and or Canada or Europe. And then maybe that would be good for China. I don't know. But I think that what we're seeing is, going to be respecting this uptrend. So chill, just be patient. If you're doing options like I am, maybe that's risky. So good to be patient. But anyways, those are my thoughts on NIO. And then so I got some requests, and so I'll go over those. I see one from Lakshay, but I do have a few ahead of yours from Hydro Hustler. And so I'll do one of Hydro Hustlers and then I'll get to yours. And so I'll just do these in order of received. And so I will add up IBRX and then I will add QUBT. And so IBRX, this is Immunity Bio Incorporated. This was down yesterday to $2.75 at close, being down about 1/3%. Looking like it's putting in higher lows, so that's good. But on the shorter term, getting pretty close to putting in a lower low. It did have this massive gap down. And let's see, I'm just going to draw a horizontal line to mark that. The gap fill, the close was 464. So got that marked there, dashed, because it's an unfilled gap, make that blue. So we know it's a gap. That we could not get up to there. And let's see, we got this push in volume here. Less than 20 million shares traded. Over here, getting higher. We're seeing, again, less than 20 million, but here, less than 19 million shares traded. So higher highs in the stock price, lower highs in the volume. That is, going to be, effectively a bearish divergence because you're not seeing the volume backing the moves. And then we see a pullback. So I don't think that necessarily looks so good. With the RSI, you don't have a higher high necessarily because, this wasn't a high. It was just trending higher. Let's see. We do have, this is the high here. This was the high here. We have a lower high here. Lower high in the RSI, so that's not bearish divergence in that sense. But generally, I think this looks weak. And, I think, kind of just thinking about Tesla, what do you love? Do you love this stock? Do you love this company? Do you need to be invested in it? Considering the kind of market that we're in, where it might be the beginning of a bear market, who knows? We might just be seeing a little bit of a pullback before we put in new all-time highs. Is this one that you have to be holding? I don't know. You got to ask yourself that. And this, to me, the answer is no. I have no idea. Market cap, 2.35 billion. So, it's not in the millions. It's in the billions. So I think that's good. But, I think that this could just potentially be going lower. Go back in time where there are reverse splits. No. But yeah, I just think this seems risky. Lower highs here, lower lows, bigger picture. Need to see a breakout. And so let's just kind of zoom in here on these levels. So I just thinking, I want to connect it to the high here. And, I'll do, we can do the open from October 29th, being approximate. Maybe there's a possibility of a breakout there. But, I don't have to draw it from the high here. I could draw it from, the closes. So there, it's like, or the opens, no closes above this level. And we just look at that. I drew that blind. Just drawing that, let's just look at those pivot points that I have here. So this pivot point, arbitrary. But why did I draw it there? Because I want it to be intersecting with the open from this day, which was May 3rd of 2024. This also seemed to maybe go up around the same time that the meme stocks went up. So I don't know if this is any relation. But yeah, so that's effectively a pivot point that I have there. And then the other pivot point is, the open here. No closes above that downtrend. And where do we get rejected from? Basically, exactly. I drew that level blind based on those levels I was just talking about. 426 got rejected from it. Kissed that level, pierced it very briefly, touched it, got rejected from it. There's nothing to me that suggests that this is actually going higher until, we get a close above this downtrend, and we haven't seen it. And it's a downtrend, so the expectation is just getting lower. So yeah, I don't like it. I think it's too risky. We do have, before I end this, being ultra bearish on it or risk averse. Yeah, I mean, we got that right there, kind of breaking down. I could adjust this. I think that this is going to be putting in new lows, so be cautious with it. So hopefully that's helpful. And so WAG, thoughts on laser. I kind of covered it a couple days ago. If you want my thoughts on laser, put your votes in on this. My thoughts on laser, my thoughts on ChargePoint, any EV charging stations, my thoughts have basically migrated towards Tesla. Luminar put basically a hit piece on Tesla via a YouTuber. I'm a YouTuber. You guys know I'm just a guy. James, if you just do it's not constructive to me. I wanted to do it yesterday, but I was tired. I had mentioned that. You just keep writing you over and over. I'm not going to do it if you keep doing that. Sorry, buddy. Share your thoughts in the comments down below means share thoughts. And actually, on that note, I don't have to be doing any of this. I effectively don't make money making YouTube videos. I do this for myself. And if I just get constant, basically people pestering me with tickers over and over and over and over and over and no thoughts on that, it's not helpful for me. It's not constructive for me. And so if I'm just going to end the stream here, if you guys want my thoughts on ChargePoint, if you want my thoughts on Luminar, any other EV charging stations, vote in this. That you want to hear my thoughts on Tesla. And if you don't care, then that's fine. I don't care. I want your thoughts. I don't want just constant request, demand. This is a lot of work. I work a full-time job. I'm trying to figure out how to grow a channel on YouTube. I'm trying to figure out how to trade. I'm trying to share that with you guys. I don't have to do this. This is helpful for me. But getting demands constantly, it's not worth it. So with that being said, if you appreciate this, appreciate it. If you want more, subscribe. And if you don't, if you just want to demand, go away. I'll see you guys later. I hope you have a great day trading, and I will be back for a stream to share my thoughts on Tesla, and I'll cover my thoughts on other stuff. But I'm not gonna just continue to get demands. If you want to demand stuff, if you want to request stuff, ticker request live Sundays.